This is the Self-Publishing Show. There's never been a better time to be a writer.
I'm Barry Kernon. I run the authors and journalists team at H.W. Fisher, Chartered Accountants in central London.
Okay, so you're an accountant, but it is authors and journalists, did you say?
Authors and journalists, and also artists and other creative people, preparation of accounts and tax return and tax planning.
Okay, so Barry, if we start rather wide in terms of principles, some people listening to this podcast will not be making money yet. They'll be wanting to and get to the point where they can quit their 9-to-5 job and transition into full-time work as a writer. Others will be further down that road. But what in general should they be thinking about in terms of their tax affairs? What decisions do they need to make?
Probably the most important decision at the outset is record keeping. It's very important to avoid penalties later, delays in putting in tax returns. So a good system of recording income and expenses can be done in all sorts of ways. It can be done digitally, which is a thing that's coming in the future, not too far away, or it can be done manually on pieces of paper or in an exercise book or on a spreadsheet or an analysis paper. The key to it is, as far as possible, make sure you record all income and detail expenses under the various headings that will apply and will be going into the accounts. Once you've got that under control, then you're in a position of strength, arguing with an inspector of taxes who doesn't agree with what you've put in your tax return.
And so keeping records also involves, I'm assuming, evidence, like receipts, and a bit of a bane of everybody's lives, but keeping all those bits and pieces of paper that may be called upon at some point, you may be called upon to show them?
It is advisable. As a matter of fact, there's nothing in the law that says you have to have a receipt for everything, but it's best to keep as many as possible. And if you don't get a receipt, you can annotate a bank statement with detail of what the expense is, or you can annotate credit card statements. And it's also important to know what's going into the bank account and to be able to identify items that aren't income. Because if you can't identify anything, HMRC will assume it's income. If they inquire into your return, you can't prove it was a gift from Uncle Henry.
Okay, so we're talking UK here. Let's take an example of somebody who's just started publishing their first book, and they have a smattering of income. So maybe up to £200, £300 a month selling books, but they're also in a full-time job doing PAYE. What do they need to do? First thing we've already answered, which is to keep a record of the income.
Keep a record. You need to notify HMRC that you've got a source of income, and they'll require you to put in a tax return because you are, in addition to being employed, you're also self-employed, and they always require a return from self-employed people. Income at that sort of level, you have a choice of claiming the actual expenses or £1,000, whichever is higher. Sometimes it's simpler just to claim that. Okay,
so this is the amount you would claim as your outgoings, which offset whether you have to pay tax on your income.
Yes. Up to £1,000 is exempt from tax. So it's simple at that level. You don't have to declare it. If you've got an income of, say, £2,000 and your expenses are £800, you can claim £1,000 because that's permitted.
I didn't know that. I've never heard that before.
It's a relatively new rule. Mm-hmm. It doesn't only apply to authors, it's all self-employed people.
Sure.
It's helpful particularly for people whose income is declining. This may not be your audience, but people whose income is now only £1,000 or £2,000 a year from past royalties or ALCS payments or PLR, then they just either don't declare it because it's under £1,000 or claim up to £1,000 expenses.
Seems like a very decision full of common sense because it takes all the faff out of a small amount of money.
Yes. It's done to suit HMRC. They don't want unnecessary tax returns.
Yeah. Okay. So the tax returns, I remember in the old days, you used to think once you start having to do one, you have to do them for years and years. It's self-assessment, I guess, is what we call it now, isn't it?
Self-assessment applies, and generally HMRC will insist on a return for self-employed people as long as they're self-employed. Although occasionally you can persuade them, particularly if you do fall below that £1,000 exemption. Then you could persuade them not to issue a return and on the basis that you'll notify them if your income increases in future.
And if you had this extra income on top of your PAYE salary, Your self-assessment covers both of those. You declare everything on your self-assessment.
Yes, you put your employment income and tax deducted on employment pages, your self-employed income and expenses on self-employed pages, but it's all part of the same return. You either end up with a tax bill at the end of the year or on the 31st of January following the end of the year, or you can have it collected through the operation of your code number by arrangement with HMRC.
Okay, so that is a slightly less painful way of paying tax. It spreads it out over the year. Okay, so there's our beginner person who's just started to earn a little bit extra money. Important tips for them to remember: make a note of all your income. I mean, most of it is electronically traceable now anyway. And second of all, inform HMRC and start filling in a self-assessment form.
Yes, it may also be important to register for national insurance. Self-employed national insurance applies at a figure of about £6,200 profit. So not for the absolute beginner, but once you've gone over that, you have a liability. So you should certainly notify at that stage.
And then at some point, hopefully for this author's career, they're going to hand in their notice to their 9-to-5 job that they hate, and they're going to start working for themselves, getting up and working in their pajamas at home, writing. What do they need to think about at that stage?
Keep the P45 handed to you on the cessation of your employment, because there'll be a refund of tax usually, depending on the time of year. That'll be needed for the next tax return. Notify HMRC that you're now fully self-employed so that you cover the national insurance position, and then get down to the record keeping.
Again, record keeping, tracing everything.
It's very important, because if you do have an inquiry from HMRC, the Inspector of Tax's whole reason for living is to discredit your records and to be able to argue with your expenses. So as long as you've got good records, you're in a position of strength.
So that's interesting. You say you legally don't need receipts, but there could come a time when it's going to stand you in good stead to be able to say this is why.
Yes, HMRC always ask for receipts, but if you haven't got them, you've got a record, you've got a note on your bank statements, or you've got a diary note. You've written your taxi fares or your travel costs in a diary as you go along. That's okay. That's a contemporaneous record, which is acceptable.
And one thing we haven't said that people should do, that I'm going to suppose you think people should do, is get an accountant.
Well, it's not always necessary. It may not be cost effective at the lower levels, but a good accountant can usually save as much, enough to cover his fees anyway, his or her fees.
Yeah. Can you give us an idea of what sort of fees people would be looking at for an accountant?
Probably start at £400 or £500 a year plus VAT typically. The costs will go up if they're VAT registered, or there's a need to put in VAT returns, or there's a need to deal with digital bookkeeping, which is coming in future.
Yeah, so let's just mention digital, and we'll carry on with some of the things we need to put in place. But the digital side of things, so I use Xero.com, and I know there are quite a few. I think we're going to be rudely interrupted by some loud sirens in a moment, Barry, but let's see if we can keep our voices going. It'd be exciting for the listener to know that we're in vibrant London. It's probably another knife crime. So I use Xero.com, and there's FreshBooks and QuickBooks and quite a few other packages around. How do you view those? Are they a useful tool for people?
They seem to be rather time-consuming, I find. The world seems to divide between the younger people who are really keen to get on with digital record keeping and have it all on their phones and so on, and people who are a little older and not used to spending so much time on their record keeping, who don't like it so much. The moment there are something near 20 software suppliers that have been registered with HMRC, and they'll grow in number because HMRC haven't yet decided what's required under Making Tax Digital, which isn't being introduced yet for most of us. The only Making Tax Digital that's in existence at the moment is for people who are compulsorily registered for VAT, who have an income from UK sources of over 85,000 a year, and that applies with effect from the beginning of next month. It's going to be compulsory digitalisation. There is a method of continuing with Excel. A lot of people like using Excel, and there is bridging software that will enable you to carry on using Excel and link digitally with your VAT returns.
Yeah, and we're in the middle of a bit of a campaign from HMRC, I think, aren't they, on VAT returns and so on, moving to digital. I've seen some of the TV adverts.
Yes, it's because it becomes compulsory from the 1st of April, and lots of people don't know that yet. Yeah.
Good. Well, some extra work for you, hopefully.
Yes, I think there will be.
Yeah. So, our example author now, who let's say that they've moved up a bracket and they're now earning £50,000 a year, so equivalent of sort of $65,000. But we are talking UK, I should say, in this interview. In terms of minimising their tax, which is something most of us are keen to do, what steps should they be taking? I'm thinking things like PAYE and expenses. How should they approach things?
Well, the first thing is to make sure that they claim all the expenses they can. A lot of people don't claim enough, for example, for home costs. Most authors work from home. Many people have a room that they use as an office. Some people don't, but nevertheless they work there for many hours. And HMRC are quite generous in their attitude to claiming home costs. They have a number of examples on their website where you can claim a proportion if you've got a dedicated room, or you can claim a proportion if you use a certain area of a room. As long as you have a reasonable rationale for the expense claim, that will be acceptable. And a lot of novelists will have location research expenses, a lot of travel and accommodation. Those are important not to lose track of. It's a good idea to have a diary, actually, which is a non-financial record of what you were doing. It helps in an inquiry to justify sometimes the expenses that you've claimed, because it ties in with where you were doing your research. So there are obviously lots of expenses that can be claimed, but you start off with home costs, and then you've got broadband and telephone and cartridges and stationery and traditional costs. Authors can claim books and all the equipment that they use.
The books they read.
The books they read, by and large, are claimable.
Did not know that. I've made some money from this interview.
Also, when people first start, you have quite a lot of your young or authors of all ages just starting will already have a reference library. They will have been reading for years. The crime novelists will have been reading crime novels, etc. And that constitutes a reference library, and capital allowances can be claimed on that. That's a form of depreciation that's built up over the past 10 years, and we're now starting writing. We can now claim for those books.
Wow. So this shows the value, Barry, of a specialist accountant. Because my accountant's not a specialist. He does lawnmower manufacturers and, painters and decorators and me. So I bet he hasn't looked into this or has knowledge of that, because that's really interesting.
No, it's certainly claimable. And also people have got a laptop they've been using for a couple of years, and people who've been writing for some time and then decide that they need to go on a creative writing course, for example. That sort of expense is allowable unless you haven't done any writing before. If it's a new skill, HMRC won't allow it. But where you've already got the skill of writing, you're just improving it, the expense is claimable.
Well, what's the rationale behind that? Why, if it's a new skill?
It's because it's to put you in a position to start. It's not an expense incurred wholly and exclusively in the course of the work itself. That's the distinction. But because you have been writing already, whether you've been published or not, you've been writing, you can claim those courses and conferences costs.
Okay. Now, my accountant does do PAYE with me for the first £11,500, I think it is, to ensure that I take advantage of that bit of, I can't remember what it's called now, the threshold, is it the first amount of earnings that are tax-free? Is that a sensible thing to do?
Well, you don't need to be PAYE to achieve that. You're entitled to that personal allowance, whatever your income is. It's $11,850 at the moment. It's going to $12,500 from next month. Everybody's entitled to that. You would only need to be PAYE if you had a limited company. If your earnings go through a limited company, then you have to. You can take a salary as part of your income. You can take dividends as part of your income, and you can reimburse yourself with expenses that you've incurred on behalf of the company. Those are the three main ways of getting money out of a company.
Okay, well, we should talk about that then. So that is an option, and it's the option I went down at the beginning. In fact, my business wasn't writing to start off with, it was something else. I started a private limited company, of which my wife and I are the two equal shareholders. So what is, and this is perhaps the most common question we get asked, should I start a limited company or should I be a sole trader?
Well, on that example, if you're earning, say, £50,000 and your wife isn't earning very much, then it would make sense for you both to have shares, and you can pay yourselves dividends to spread the income between you, use up 2 lots of personal allowances. We usually recommend having 2 different classes of shares so that you can vary the amounts of dividend you pay. You might not want as much of a dividend as your wife, or vice versa, depending upon the income levels. That enables you to even out your incomes between you and maximise the use of lower rates and personal allowances.
And what are the levels now? I know it changed, unfortunately, just after I started in self-employment. They changed the dividends rules. It used to be able to take a lot of dividends out without paying tax.
Well, yes, because in the previous system, the dividends were deemed to have been taxed. There was a tax credit that was applied to the dividends, which was effectively the corporation tax that the company paid. Dear old George Osborne introduced the dividend tax, which meant that it doesn't apply anymore. There is an exemption of £2,000. The first £2,000 worth of dividends are exempt, but above that, it's 7.5%. From April, that is up to £50,000 total income. So you can take generally about £8,500 worth of salary, which avoids a national insurance liability, and the remainder of the £50,000 take as dividends. And the top rate of tax is then 7.5% on dividends and 19% on of the corporation tax. That corporation tax figure is due to come down before the end of this Parliament to 17%. So it'll be 24.5% top rate. As an individual, self-employed person, you have 20% personal tax liability, and 9% is the maximum class 4 national insurance. So there's a bit of a saving, but there's not a huge difference between the rates at that point. And you have to bear in mind the costs of running the company, setting it up, and additional costs because of the requirement to prepare statutory accounts and corporation tax returns and so on, which costs more in accountancy fees.
And one of the bits of advice I got and why I set up a limited company, we were doing video production initially, is because of liability. And because the possibility that you're going to cause an injury to somebody in the course of your work, and a limited company protects your house and home and so on from that. Is that still the case? That a sole trader or somebody just doing a tax return form may be exposed to a greater liability?
Well, certainly, that's what limited companies were set up for protection, and the limited liability is there and is more important in some trades than others, actually. Authors are a slight exception because we get asked this quite often. Should I set up a limited company to protect myself from libel actions? That's one of the types of legislation you can't protect yourself from, type of legal action. I mean, you can't protect, because under a libel action, everybody gets sued. The author, the company, the publisher, the print, yes, everyone. So, but otherwise, yes, personal public liability injuries, people tripping over your cables and falling down the stairs and so on. It's although you may be insured, it's probably advisable to have a company as well. The insurance company might decline to pay for technical reasons, in which case you fall back on the limited liability protection.
Yeah, okay. So we've got our person who is now earning more money. Now they're hopefully going to get to the Mark Dawson level of earnings, and Mark's publicly declared that he had income of over $1 million last year for book sales on one of his platforms. Do things change at that level?
Well, if you're going to use a limited company, it's quite helpful. If you're making that sort of level, you are still paying 19 or 17% corporation tax. You can leave the money in the company and invest it within the company. It's a cash flow advantage, fairly substantial. But it still has to come out of the company at some point. Some people use it for retirement planning long term, on the basis that they don't draw much income out, or they draw just what they require, and they end up with a money box at the end from which they can draw throughout their entire retirement and still not pay any higher rates of tax. So it's quite useful to have limited companies for those larger amounts.
Yeah. So it becomes more of an issue than it does at the lower levels. Great. Well, I think we've covered quite a big area for UK. Is there any important areas I've missed?
Just one interesting case I had the other day. A lady had a 2-book deal, advances agreed of 285,000. And she said, I want to have a company if that's going to work, and I want to take the money out in a couple of years' time to buy a flat. Well, I said, that's absolutely the wrong way to do it, because if you do that, take it all out in dividends in 2 years' time, you'll end up paying your 19% or 17% plus 38.1% on the dividends, and some at 32.5%. You actually pay more tax than if you didn't have a company and you claimed author's averaging, because you can average fluctuating profits over adjoining years. And in this particular case, I worked out that the profits could be averaged over 4 years, and the tax would be just quite a bit lower than having a limited company. So you have to look at each individual case, actually.
So the author averaging, just explain that concept to me.
Right. Where an author has profits that fluctuate, obviously advances come in. Generally, authors have advances. This is not self-published authors, but traditionally published authors will have an advance on signing a contract, an advance on delivering the manuscript, an advance on publication. So you can see they might have maybe even a signature and delivery advance in 1 year, then nothing the following year, and then a publication advance the following year. So you've got a big profit, and then nothing, and then a medium-sized profit. So the law says you can average those 2 years so that you make use of the allowances would otherwise be missed. And then having averaged those 2 years, you take that one and average with the next year. The only stipulation is that the earnings must fluctuate enough. So 1 year adjoining the next has to be 75% of the adjoining year's profits, or under, for it to be allowed. So it's quite effective.
Is this common to other professions as well? Is this exclusively for authors?
Farmers can do it.
For bad seasons? Well, every season's a bad
actually,
season.
artists as well. I mean, it's an artistic exemption that applies also to composers and painters and sculptors and authors.
Yeah. Good. Is there anything I've missed, Barry?
Just within this range.
Yeah.
Brief mention of pensions. If you have a limited company, you can pay contributions direct from a limited company gross into a pension scheme. Overall, it's much the same, but you don't need a company to pay into a pension scheme. But you can, in other words, you can do it either way. Sometimes with limited companies, there are different rules on subscriptions, allowable subscriptions. For example, if you're a company director and you pay a subscription to the Society of Authors, that's not allowable because it's not a permitted subscription under the PAYE rules, whereas it is claimable for self-employed people. So there are one or two differences, but not terribly major.
This is something where you do need your accountant's knowledge and advice, which brings us back to one of the early points is getting an accountant. Yes. Although you say at the very early stages may not be cost effective, but as soon as it looks like it is cost effective, it's going to pay, and it's going to cover you as well from potential mistakes. Yes,
the idea is that the accountant will get your tax return right, and you can sleep at night not worrying about the mistakes you made.
Good. And I'm quite excited about the couple of bits I've learned. And of course, you've reminded me of the corporation tax, which is, I think a few years ago, they set it stepping down a few points. So that happens in April. Is it 17 in April or 18 in April?
I think it's 19 now. And I think it's 2021. It goes to 17%. I'd have to check that.
Yeah, I think that's about right.
I think it's before the end of this Parliament anyway.
Although having said that, the way politics is, as we speak today, who knows what's going to happen in the next...
Philip Hammond might have something to say about that.
Yeah, all that might be cancelled. But anyway, Barry, fantastic.
Sorry about the coughing.
Coughing's fine. We can deal with that.
You can edit that out.
We can deal with that and edit. But it's been really illuminating talking to you. Thank you.
Good. Oh, it's a pleasure.
This is the Self-Publishing Show. There's never been a better time to be a writer.
There you go, Barry. I think he's your accountant, isn't he?
No. He, how did I get to know Barry? I approached him some time ago as a painter appears to my right. So if there's noise in a minute, you'll know what it is.
Which painter is it? Anyone we've heard of?
It's Dave.
It's
the
not
painter.
Monet.
No. Yeah, so I have thought about going with Barry a few times, but I have a local accountant here, which is sometimes a little odd, given that I don't know. I suspect I'm not his biggest turning over client, but given that I'm effectively a one-man band, I probably aren't far off in terms of the the revenue that is being generated and the opportunity to save money through clever tax planning. It's possible that I would get slightly more from a firm like Barry's, but I'm very happy with Nick. I've been with him since the start, really, and he's kind of like my accountant, my tax advisor, my bookkeeper as well. So I'm quite happy to stay with him. But Barry is excellent. His firm is skewed towards creatives, so novelists, people in the media, film and TV, that kind of stuff. So it is that they're specialists. They know exactly what they're doing when it comes to this, which is often a very tricky subject and a very tricky issue. So even how royalties are treated in terms of whether they should be vatable. I don't know. I haven't heard the interview yet with Barry, but I don't know if that came up. But it's very... Yeah, James is frowning, so he can't remember. But it's an interesting issue in that this is money coming in, it's revenue, and I'm a VAT registered company now, which means I can reclaim VAT, but I've got no income VAT or output or income. I never know the difference, but I'm not actually charging VAT to anybody because Amazon is charging the VAT to the customer, and also the money is coming from Luxembourg, so it's not vatable in the UK. So we actually had to go to a fairly, by the way, this is not tax advice. No. I am not a tax lawyer by any stretch, but we had to go to very, basically the tax lawyers that accountants use when they have tricky questions. A firm called Tolley's went to them for some advice a couple of years ago about how this should be treated, because it's new. It's a new area. Arguably, the tax system is not quite set up to account for it yet. So. Yeah. Interesting times.
And we had a very similar thing with SPF, with the income which comes from New York, sort of from New York. That gets complicated as well. When the whole country borders thing you start to realise why there's such an issue now with companies like Amazon and Apple, who often get criticised in one country for not paying their tax. And they're always at pains to point out they do pay their tax, but they don't necessarily pay it in that particular country because they have headquarters in one country, supply and distribution in another country. Ultimately, they're going to pay tax where it's more efficient for them.
Yeah.
So we are in new territory, and I think governments need to get their head around that as well, find an equitable system. Now, when we move everything to the Grand Cayman Islands or some other tax haven, we might move away from Nick. Maybe then we'll get a different accountant.
Yes, possibly. Yes, Nick also works on SPF as well. So yes, yeah. I think when that comes, we'll probably be we'll be on the beach sipping pina coladas with someone.
Well, our accountant will be some Italian guy from Sicily. He'll do our accounts.
We can get John to do it. John Dyer. He's
yes. Well, we'd never.
What could possibly go wrong?
We pay our tax like good citizens. Okay, good. Well, I think it's been a useful episode. I mean, it was certainly useful for me doing the interviews, listening to that. And as I alluded to at the beginning, part of it is the advice you get, nuts and bolts advice, but a lot of it is the approach that you have to it being a business. And actually, I've been recording Mailer Lite sessions. We're now going to put Mailer Lite into the 101 course and Ads for Authors. It's a matured platform. It's very growing in popularity amongst the SPF community. I have to say, I've been incredibly impressed with it, using it. I know some people will be cheering because we've been a little bit on the fence because they had a slightly tricky first couple of years, but they're certainly through that. And even when I'm doing these sessions where there's decisions to make about the address that gets shown, the advice is set yourself up properly. Right from the beginning, set yourself up as a successful business. And as we said at the beginning, you give yourself a better option of being successful.
Yeah, absolutely. And also enables you to make decisions that are not necessarily influenced by personal emotional factors. So, investment, you can look at advertising in different ways and treat it slightly more analytically and work out, how much can the company afford to invest in ads, and look at it in those kinds of ways. So all of those kinds of decisions are seen in a slightly different way when you look at them through that prism rather than the kind of the sole proprietor prism.
Yes, the sole proprietor prism. I got that album in the 70s. It's a great progressive rock.
Sole proprietor prism. Sounds like Lester Piggott was then. There's another
reference
70s
no one else
reference.
is going to understand. Lester Piggott being a 1980s jockey who went to prison along with Ken Dodd for not paying his tax.
Could have done that.
Okay.
I've linked tax and sole
you've done it
proprietors
very
and everything. I'm really clever.
And 80s references that no one understands.
Exactly.
Look, that's it. Do you know by the time we reconvene, England could have won 2 World Cups?
There's a song about that.
Yeah, we're not going to sing
No,
that
we're not going to
song.
sing that. No, they could do that. That's right. So we have the Women's Football World Cup semi-final tonight. And
Against
then,
our friends in America.
Against our friends in America. May not be friends tomorrow. And then Wednesday, England are playing New Zealand, and they have to win in the cricket. Well, they don't have to win, but they probably have to win in the cricket.
Well, I think India are going to win today, so I think they probably do have to win.
I've just seen the
I think
score.
they
They're
might
probably
do.
going to get about 500 runs. So yes, they are going to win today.
Yeah, so what's the betting that England haven't won any World Cups by the time we reconvene?
Very, very. There's a very good chance. That's exactly what will happen.
The bookies are taking no.
We like
further bets on that.
semi-finals, but we don't like finals.
Yeah, we can do it. We can do it. Let's be positive. It's all about that business attitude. Okay, look, that's it. We are going to record another episode, which is going to go out on the 19th of July, and then we'll have a little break. And hopefully the episodes after that will be live from New York, sort of live from New York. Thank you so much indeed. Just a reminder, if you want to be eligible to get invited to our live monthly trainings at Self-Publishing Formula University, go to patreon.com/self-publishing show. That's it. Excellent. Almost time for holiday. One more recording to do. But until then, I'm going to say it's goodbye from him.
And it's goodbye from me. Goodbye.
Goodbye.
Get show notes, the podcast archive, and free resources to boost your writing career at selfpublishingshow.com. Join our thriving Facebook group at selfpublishingshow.com/Facebook. Support the show at patreon.com/self-publishing show. And join us next week for more help and inspiration so that you can make your mark as a successful indie author. Publishing is changing, so get your words into the world and join the revolution with the Self-Publishing Show.